Ayan guys, welcome po sa ating subject, income taxation. So today, didiscuss natin yung general principles and concepts ng taxation. So please listen well and I hope you enjoy this video.
So let's start first with our first chapter, general concepts and principles of taxation. So what are the learning objectives here? First, students should, at the end of this lesson, students should understand the inherent powers of the state and understand the purposes of taxation. You should be able to identify the nature, scope, and limitations of taxation and have knowledge on the basic principles of a sound tax system. Here in this lesson, you'll also identify the situs or the place of taxation, identify the sources of taxation, and identify other doctrines in taxation. So let's begin. Alright, so let's have a definition of what taxation and taxes. So there are differences between the two, so do not be confused. Taxation is the power by which the sovereign, the state, through its law-making body, imposes burdens for the purpose of raising revenues to defray the necessary expenses of the government. So there are two concepts of taxation. It's the power to tax and the process by which the taxing power is exercised. First, it's the power to tax, and second, it's the process by which it is exercised. Okay? What about taxes? It says earlier that it's the burden, diba? The enforced proportional contributions levied by the lawmaking body of the state for the purpose of the government and all the public needs. So, what are the characteristics of taxes? It is imposed by a state, levied by the legislative or the lawmaking body on persons, property, and excise for public purpose. Excise also means privileges. Next, it is in an enforced contribution, payable in money, and should be proportionate based on the ability to pay or the progressive system of taxation. And lastly, it should be paid at regular periods.
Now, so what are the essential elements of tax? Ano-ano ba yung mga characteristics ng taxes? Number one, it is an enforced contribution. So ito ay mga nire-require na contribution sa atin ng ating gobyerno. Pangalawa, it is generally payable in money. So pag magbabayad tayo ng taxes natin, usually money ang pinangbabayad natin, di ba? And it is also proportionate in character. So kung mas malaki ang sweldo mo, mas malaki ang tax mo. It is levied on persons, so individual or corporations. It may also be property or right, and it is also levied by the lawmaking body of the state, the legislative department, which is composed of the Congress and the House of Representatives. And it is also levied for public purpose.
Now, what are the sources of tax laws? So, saan ba galing tong tax laws na to? Bakit meron ito? Again, as I earlier mentioned, it's inherent in the sovereign. So first, we have the Constitution, the 1987 Philippine Constitution. Are you familiar with it? Next, we have the National Internal Revenue Code as amended by the Republic Act 8424 or the Comprehensive Tax Reform Act, which took effect in 1988. And this is further amended by Republic Act 10963, or the Tax Reform for Acceleration and Inclusion, or the TRAIN Law, which took effect on January 1, 2018. We also have the Tariff and Custom Code, the Local Government Code, local tax ordinances, or the city or municipal tax codes, tax treaties and international agreements, special laws, decision of the Supreme Court, because it forms part of the law of the land, and the regulation or the revenue rules and regulations, and administrative ruling and opinion. So this is usually cited or given by the Internal Revenue. So let's discuss now the inherent powers of the state. Why inherent? Inherent means it is vested in someone or in the state as a privilege or right. So this is just a review. You have already discussed this while you were in high school, correct? So we have three inherent powers of the state: the police power, power of taxation, and the power of eminent domain. Well, what is police power? It's the power of the state in promoting public welfare and regulating the use of liberty and property. So it's not the power of the police, but it is the power of the state in taking care or in promoting the public welfare. Whereas the power of taxation refers to the power of the state to raise revenue for the expenses of the government. And this is what we're going to tackle in this entire subject. And the third one is the power of eminent domain. What is the power of eminent domain? It's the power to acquire private property. For what? For public purpose upon payment of just compensation. For example, you have your private property, land, right? And the government wanted to build um, a school, a public school in your land. The government may exercise that power of eminent domain, and he can acquire your property, of course, with payment of just compensation. You are forced to sell it to them. Okay? So these are the differences between the three inherent powers as to purpose, concept, authority, scope, and importance. Okay? For the purpose, taxation, of course, is to raise revenue. For the police power, its purpose is for the general welfare, while the eminent domain is for public use. For the concept of taxation is enforced contribution. And for the police power, it's to implement laws. And for eminent domain, is the concept is just compensation. And who can exercise it? Who are the authorized person to exercise it? It's the national and local government for taxation and police power. But for eminent domain, may be exercised by, of course, the government or the public utility company. For as to scope, well, eminent domain has a limited scope because it can be only exercised if the government can justify that your private property should be used for public purpose or is needed for public purpose. While police power has a broader scope than eminent domain. And for taxation, it's the strongest among the three because it has an unlimited, comprehensive, plenary, and supreme scope without any limitations This is the strongest one. And as to its important, taxation is, of course, you'll see it in the lifeblood theory, necessity, and symbiotic relationship. For police power, it's important for regulation and safety. And for eminent domain, you'll see the common interest. So let's proceed to the purposes and effects of taxation. So what is taxation for? And what is the effect? So the primary purpose of taxation is of course to raise revenue. It's also called the fiscal purpose. The government, in the exercise of its power of taxation, has the primary purpose of providing funds or property to promote the general welfare and protection of its citizens. But it's not purely for raising revenue, but also at some point, the taxation is used for regulatory purposes. Taxation is employed as a device for regulation or control. So what are the effects? Of course, it promotes the general welfare also of the people. So without the taxation, probably our life is in chaos because we are not being supported by the government or our general needs are not being supported by the government. Also, taxation is for reduction of social inequality, meaning those who have less in life should be taxed lower than as compared to those who have lots of riches, but they are being taxed higher than those who do not have. Also, for economic growth. Let's have a case discussion. So for you to be familiarized with the subject matter. The Sangguniang Bayan of the Municipality of Sampaloc, Quezon, passed an ordinance imposing a storage fee of 10 centavo for every 100 kilos of copra deposited in any bodega within the municipality's jurisdiction. Copra, ito yung mga coconut, ba? The Metropolitan Manufacturing Corporation, the MMC, which has a principal office in Makati, is engaged in the manufacture of soap, edible oil, margarine, and other coconut oil-based products. So basically, they use copra. So it has a warehouse in Sampaloc, Quezon, used as a storage space for the copra purchased in Sampaloc and nearby towns before the same is shipped to Makati. So did you get the situation? So MMC or the corporation has a storage in municipality of Sampaloc, Quezon. It's storing its supplies to be distributed to its Makati office. Now, MMC goes to court to challenge the validity of the ordinance passed by the municipality of Sampaloc, Quezon, which imposed a storage fee of 10 centavo. He demands, or the MMC demands, the refund of the storage fee it paid under protest. So paid under protest, it means you have already paid the tax imposed to you, but you are not fully admitting your liability. So that is why it is under protest. But the question is the ordinance, the one passed by the municipality of Sampaloc, Quezon, valid? Explain your answer. So let's see. So the answer is yes. The municipality is authorized to impose reasonable fees and charges as a regulatory measure in an amount commensurate with the cost of regulation, inspection, and licensing. In this case, the storage of copra in any warehouse within the municipality can be the proper subject of regulation pursuant to the police power granted to the municipalities under the revised Administrative Code or the General Welfare Clause. A warehouse likely to endanger the public safety or likely to give rise to conflagration or fire because the oil content of the copra, when ignited, is difficult to put under control by water and the use of chemicals is necessary to put out fire. It is thus reasonable that the municipality imposed storage fees for its own surveillance and lookout. That is in the case of Procter and Gamble Philippines Manufacturing Corporation versus the municipality of Hagna, province, Bohol. So, in this case, so what are the theories of taxation? Right, so number one is the lifeblood theory. It says here that the taxes are the lifeblood of the government. For without taxes, the government can neither exist nor endure. Ba? The government would be paralyzed without taxes for lack of power to activate and operate it, resulting in its destruction. Like blood in our bodies, without it, we would be paralyzed. So is the government. Second theory is the necessity theory. So the theory behind the exercise of the power to tax emanates from necessity. Without taxes, the government cannot fulfill its mandate of promoting the general welfare and well-being of the people. So this theory is needed to preserve the state's sovereignty. It's a means to give protection and facilities. And finally, but not the least, the benefits protection or the reciprocity theories, or is known as doctrine of symbiotic relationship. It says here that the taxes are what we pay for a civilized society. So despite the reluctance to surrender one's hard-earned income, every able person must contribute his share in the burden of running the government. The government, for its part, is expected to respond in the form of benefits to improve the lives of the people. So while we as taxpayers, we pay or we comply with our duties to pay our taxes, on the other hand, the government has the duty to, after collecting our taxes, has the duty to protect our interest of its citizen. So this theory is also the basis for the situs of income taxation. Situs means the place of income taxation. For example, you are currently working in another state. That state where you're working has the right to tax you or to impose taxes on you under this doctrine because they have to protect you as well. Okay? So manifestation of the lifeblood theory, the rule of no estapel against the government or the no injunction rule. It says that the collection of taxes cannot be stopped by injunction. Right? Why? Because if you stop the collection of taxes, then, of course, under the theories we have earlier discussed, our government will be paralyzed. Okay? However, this rule is not absolute. There's an exception. Why? Because the Court of Tax Appeals has the duty to grant injunction to restrain collection of internal revenue taxes. But there are requisites. But before the taxpayer can enjoin or ask for an order, enjoining the collection of taxes. Number one, there's a clear and unmistakable right to refuse or to hold in abeyance the payment of taxes by the taxpayer. Probably he has shown that he has already paid the tax. Second is the collection by the aforementioned government agencies may jeopardize the interest of the government and or the taxpayer. The third one, it required the taxpayer either to deposit the amount claimed or to file a surety bond for not more than double the amount with the court. So, meaning to say, if you want to contest or to enjoin the BIR from collecting taxes from you, you have to go to the Court of Tax Appeal and question the assessment or the assessment being asked you for by the BIR for you to pay. However, you have to deposit, as in the third requisite, you have to deposit an amount for more than or for not more than double the amount of the tax dues. Okay? But this amount is reimbursable once you have won the case against the BIR. Also, taxes should not or could not be the subject of compensation or setup. Compensation or setup, as a matter of rule, setup is not allowed in our jurisdiction, meaning quits. Okay? So by way of exception, taxes can only be the subject of set-off or compensation if the following requisites concur. Both obligations between the government and the taxpayer are due and demandable, and it is fully liquidated. For example, I owe the government with 1 million tax. I have tax obligation of one equivalent to 1 million pesos. However, the government also owes me 1 million pesos. In that case, that is already both obligations are already due and demandable. Thus, as in a case decided by the Supreme Court, the court allowed that taxes could be the subject of set-off or compensation. So the third one is the right to select objects or subjects of taxation. So the government may select who are the subject or object to be taxed. Is it the individual, the corporation, or is it the exercise or the privilege? Then the second is the purpose of the tax, as long as it is a public purpose. Third one is the amount or rate, how much is going to be taxed, the kind of tax to be imposed, the apportionment of the tax, the situs or the place of taxation, and finally the manner, means, and agencies of collections of the tax. The fourth one is a valid tax may result in the destruction of the taxpayer's property because the lawful tax cannot be defeated. It brings out the insolvency of the taxpayer and forfeiture of property through police power. So that sample, you have a property, then you cannot pay your tax. The government may resort to um, claiming your property in lieu of your payment of tax obligations. Okay? Now let's discuss the basic principles of a sound tax system. So how can we say that this tax system is sound or fair probably? So what are the basic principles of a sound tax system? We can be guided by the acronym FAT: fiscal adequacy, administrative feasibility, and theoretical justice. So what is fiscal adequacy? The collection of the government must be adequate to sustain its legitimate expenses. The sources must be adequate to meet the government expenditures and other public needs. Right? And second is the administrative feasibility. So the tax law must be capable of effective and efficient enforcement with the least inconvenient to the taxpayer. It means that tax law should be capable of just and effective administration that even an ordinary taxpayer may comprehend. Although non-observance of this canon will not render a tax imposition invalid. Thus, even if the imposition of VAT on tollway operation may seem burdensome to implement, it is not necessarily invalid unless some aspect of it is shown to violate any law or the Constitution. So those who are collecting toll fees, diba? It might be burdensome to some, diba? But this does not this will not make the law invalid. And the last one is theoretical justice. Tax law should be proportionate to taxpayers' ability to pay, or that is called the ability to pay theory. It means that the higher the income, the higher the tax. Okay? So, a violation of this rule of theoretical justice will make the tax law invalid. Why? Because it is a violation of a constitutional provision for um, equal protection of law. Okay? So if the tax law is not proportionate to taxpayers' ability to pay, that will not uh, that law is invalid. So let's have an exercise regarding the basic principles of a sound tax system. Here's the problem, or here's the statement. Real property taxes should not disregard increases in the value of real property occurring over a long period of time. To do otherwise would violate the canon of sound tax system referred to as what? A. Theoretical justice. B. Fiscal adequacy. C. Administrative feasibility. Or D. Symbiotic relationship. Well, to answer the question, you have to, of course, know the acronym of a sound tax system. The principles of a sound tax system, it's FAT. F-A-T. That means that letter D, symbiotic relationship, is not the correct answer. How about theoretical justice? Theoretical justice means or is anchored on the taxpayer's ability to pay. Is it theoretical justice? The answer is no, right? How about B? Is it fiscal adequacy? So if the government will just disregard the increases in the value of the real property and maintain the same value of tax on the property, will it violate fiscal adequacy? What do you think? The correct answer is letter B, fiscal adequacy. Imagine, diba? The value of the real property always increases at least annually, right? And of course, for us to be able, or the government to be able to collect funds, they have to increase the taxes that are being collected based on the basis is the value of the real property. Okay? Now let's proceed to the nature, scope, and limitation of taxation. So the nature of state's power of tax. We have already discussed this earlier. So it is inherent in sovereignty. So even if in the absence of law, the state can still enforce contribution of taxes. Secondly, it is legislative in character. It cannot be exercised by the executive branch or the judicial branch of the government. And who composes the legislative branch of the government? It's the House of Representatives and the Senate. C. Exemption of government entities, agencies, and instrumentalities. So there are agencies performing governmental functions are tax exempt. unless expressly taxed, or their agencies performing proprietary functions are subject to tax unless expressly exempted. So it will depend on the function of the agencies. Ba? Also, the GOCCs, or the government-owned or and controlled corporations who are performing proprietary functions or private functions, they are subject to tax. However, the following corporations are granted tax exemptions: the GSIS, SSS, PhilHealth, the PCSO, local water districts. We also have the International Committee, or the association between the states for their common benefits. We also have the limitations of territorial jurisdiction, and the power of taxation is strongest among all the inherent powers of the state. Now, what are the aspects of taxation or the cycle of taxation? First, it goes uh, with the levying or imposition of tax. The legislative will create or pass a law for the imposition of tax. Then, the assessment and the collection, or the assessment first, or the determination of the correct amount. This is being exercised by the executive department through the agencies. Okay. Also, the collection of tax. So levy, assessment, and collection of tax. So that is how that is the process or aspect. What is the scope of taxation? CUPS. You have to remember CUPS. First, it's comprehensive. It covers all persons, businesses, and professions. It's unlimited in the absence of any limitations. That is why it is called the strongest among the three inherent powers of the state. It's plenary or it's complete. It's absolute and unqualified. And finally, it's supreme. It has the highest degree of application, and it's considered as the strongest in the inherent powers of the state. So how are you guys? So let's proceed. So what are the limitations of the state's power to tax? Now we have learned earlier that the power to tax is unlimited and supreme, but so there has to be limitations for its imposition. So we have inherent limitations and the constitutional limitations. First, the inherent limitations. You have to remember the acronym PT, PITI. Taxation is for public purpose. So the proceeds of the tax must be used for the support of the state or for some recognized objective of the government or to directly promote the welfare of the community. Next, taxation is inherently legislative, as we have discussed earlier. Only the legislative has full discretion as to the persons, property, occupations, or business to be taxed, provided that these are all within the state's territorial jurisdiction. So it can also finally determine the amount or rate of the tax, the kind of the tax to be imposed, and the method of collection. Third one is taxation is territorial. Taxation may be exercised only within the territorial jurisdiction of the taxing authority. Within the territorial jurisdiction, the taxing authority may determine the place of taxation or tax situs. Fourth one is taxation is subject to international committee. So this is a limitation which is founded on reciprocity of the states, designed to maintain a harmonious and productive relationships among the various states. So under the international committee, a state must recognize the generally accepted tenets or principles of international law, among which are the principles of sovereign equality among the states and of their freedom suit without their consent. So that limit the authority of a government to effectively impose taxes on a sovereign state and its instrumentalities, as well as on its property held, and activities undertaken in that capacity. I'll give you some examples, actual cases for you to be able to understand. So in case number one, the President of the Philippines and the Prime Minister of Japan entered into an executive agreement in respect of a loan facility to the Philippines from Japan, whereby it was stipulated that the interest on loans granted by private Japanese financial institutions to private financial institutions in the Philippines shall not be subject to Philippine income taxes. Question is this tax exemption valid? So the situation here is that the President of the Philippines and the Prime Minister of Japan, so they entered into an executive agreement between the two leaders of the country with respect to that to a loan facility, but where the interest granted by the Japanese financial institutions to private financial institutions in the Philippines shall not be subject to Philippine income tax. Supposedly, they are to be subject because but to income tax, but the executive agreement signed by the two leaders um, effectively exempted the Japanese financial institution, from payment of inter, interest tax on the interest on loans. Is that valid? Let's see. Yes, that. So there are two um, possible answers to these questions, and may involve the topic that we have earlier discussed. It's either the international. It may fall either to the international committee or the inherent. Um, it's in taxation is inherently legislative. So the answer may vary. It may be yes or no, depending on your basis. Okay, so let's go to the first answer. Is the tax exemption valid? The first answer is yes. The tax exemption is valid because the executive agreement has the force and effect of a treaty under the provision of the revenue code, because taxation is subject to international committee. The alternative answer, no, the tax exemption is not valid because the act of tax exemption is an act of taxation which is inherently legislative, meaning um, it's only vested in the legislative department, not in the president. The president is part of the executive branch of the government. Therefore, a mere executive agreement cannot provide for a tax exemption.
So for case number two, we have here the problem. ABCD Corporation is a domestic corporation with individual and corporate shareholders who are residents of the United States. For the second quarter of 1983, these US based, sorry, let me go back. Okay, these US based individual and corporate stockholders received cash dividends from the corporation. The corresponding withholding tax on dividend income, 30% for individual and 35% for corporate non-resident stockholders, was deducted at source and remitted to the BIR. Now, on May 15, 1984, ABCD Corporation filed with the Commissioner of Internal Revenue a formal claim for refund, alleging that under the Republic of the Philippines and U.S. tax treaty, the deduction withheld at source as tax on dividends earned was fixed at 25% of said income. Thus, ABCD Corporation asserted that it overpaid the withholding tax due on the cash dividends given to its non-resident stockholders in the U.S. Now, the commissioner denied the claim. Is the contention of ABCD Corporation correct? Why or why not?
Is the convention of ABCD Corporation that the applicable tax is 25% based on the USRP treaty, not 25 or not 35% based on the local um, taxing statute? The answer is yes. ABCD's corporation is correct. The provision of a treaty must take precedence over and above the provision of the local taxing statute, consonant with the principle of the International Committee. Tax treaties are accepted limitations to the power of taxation. Thus, the city should apply the treaty provision so that the claim for refund representing the difference between the amount actually withheld and paid to the BIR and the amount due and payable under the treaty should be granted. That is the case of Hawaiian Philippine Company versus CIR. We have case number 3 is a non-resident alien who is not engaged in trade or business or in the exercise of profession in the Philippines, but who derive rental income from the Philippines required to file an income tax return on April of the year following his receipt of said income. If not, why not? Explain your answer. So, to answer the question, you have to familiarize yourself with the term non-resident alien. A non-resident alien is not a Filipino citizen. It is a foreigner who is not engaged in who is not residing. I mean, he's not been here in the Philippines for at least 180 days and is not engaged in trade or business or in exercise of profession. But he derived rental income from the Philippines. The question is, meaning there is he has a property in the Philippines, okay, and he's leasing it out to others. Does he derive rental income? The question is he required to file an income tax return following the receipt of said income? What's your answer? The answer is no, he's not. The income tax on all income derived from Philippines sourced by a non-resident who is not engaged in trade in business is withheld by the lessee as a final withholding tax. So meaning, yung nangungupahan, bago niya ibayad yun sa lessor na non-resident alien, di ba? He has to withheld a portion of that amount and paid it as a final withholding tax to the BIR directly. The government cannot require persons outside of its territorial jurisdiction to file a return because taxation may be exercised only within the territorial jurisdiction of the taxing authority. For this reason, the income tax on income derived from within must be collected through the withholding tax system and thus relieve the recipient of the income, which is the non-resident alien not engaged in trade or business, the duty to file income tax returns. That's in Section 51 of the National Internal Revenue. Okay, so let's proceed. How about the constitutional limitations on the state's power to tax? We have a lot. First, due process clause. It's in Article 3, Section 1 of the 1987 Constitution. Also, the Equal Protection Clause, freedom of the speech and the press, religious freedom, non-impairment clause, no imprisonment for debt or non-payment of poll tax. All appropriation revenue or tariff bills shall originate exclusively in the House of Representatives, but the Senate may propose or concur with the amendments. 8. The President shall have the veto power to any particular items in the appropriation, revenue, or tariff bill, but the veto shall not affect the items or items to which he does not object. Next, taxation shall be uniform, equitable. Congress shall evolve a progressive system of taxation. 10. Limited power of the Congress to delegate taxing power to the President. 11. Delegated authority of the President to impose tariff rates, import and export quotas, tonnage and wharfage dues, and other duties. Next, no tax exemption without the concurrence of the majority of all the members of the Congress. So remember the earlier problem we had regarding tax exemption is ag- in the executive agreement between the President of the Philippines and the Prime Minister of Japan. So the rule is should be um, with concurrence of the majority of the members of the Congress. We don't have to discuss, but uh, we'll discuss some of the few and important and related constitutional limitations on the state's power to tax. In Article 3, Section 1 of the 1987 Constitution, it states that no person shall be deprived of life, liberty, or property without due process of law, nor shall any person be denied equal protection of the laws. So there, from this section of Article 3, we can derive two constitutional limitations on the state's power to tax. Number one, it's the due process clause. Secondly, it's the equal protection clause. So what is a due process clause? So it's actually composed of two classification, the substantive due process and procedural due process. Substantive due process pertains to the process where the legislative in its constitutional mandate to exercise the power to tax must clearly identify what, when, how, and why to tax a person, property, or right. It must not be arbitrary and must be in harmony with the Constitution. And in the procedural due process clause, one that opens the door to the taxpayers in his obligation to pay taxes. And also, this equivalent applies to the government. So there has to be notice. Okay, that is the very essence. That is the essence of due process clause. So you cannot deprive a person of his life, liberty, or property without notice. That is why, if you are being asked to pay a certain amount of tax, they have to prove that you were able to or they were able to serve you notice of assessment or letter of assessment. So that is part of the due process. Without it, the assessment will not be um, valid. Also in equal protection clause, but the basis of uh, another constitutional limitation, it means that tax subjects or identically situated persons or things should be taxed alike. So dapat pare-parehas. Taxpayers must be treated on equal footing. But this clause, of course, is not absolute and is subject to reasonable classification. So number one, it must rest on substantial distinction. So sino ba yung, for example, at your age are working and those who are not working, there's substantial distinction. Of course, those who are working should be taxed. Secondly, it must be germane to the purpose of the law. So if the purpose of the law, the tax law, is to generate funds, of course, the collection must be germane to that purpose. Thirdly, it must not be limited to the purpose of the law and apply equally to all members of the same class. So if you're taxing um, taxpayers or people who are earning at 25,000 a month, then of course everyone who are earning of the same amount should be taxed. Another article in income tax is exemption. That's what I was saying. In Article 14, Section 4, Paragraph 3, it says that all revenues and assets of non-stock, non-profit educational institution for educational purpose shall be exempt from taxes and duties. So So those educational institutions that are non-stock and non-profit. Secondly, their income must be their income that they seek to be exempted from taxation must be used actually directly and exclusively for educational purpose. So they are not involved in selling other products or for income generation, but the income they seek to be exempted from must be actually directly and exclusively used for educational purposes. And thirdly, there is substantial evidence to support the foregoing. Now, let's proceed to classification of taxes. So, ano-ano ba yung mga klase ng taxes? Of course, as to scope, you have the national and the local taxes. National tax refers to those taxes imposed by the national government, such as income tax, value-added tax, honors tax, estate tax. Whereas local taxes are those taxes imposed by the local government. What are those? Um, those taxes, diba, that are imposed by the cities, real property, probably real property taxes. Okay. As to subject matter or object, we have personal, poll, or capitation tax. These are taxes of fixed amount imposed upon individual residing within a specified territory. We also have property taxes, tax imposed on property in proportion to its value excise. Yun yung mga property tax na tinatawag, or these are tax on certain rights and privileges also. As to who bears the burdens, we can classify taxes as either direct or indirect. Direct taxes means that the taxpayer cannot shift the burden to another. So meaning they have to pay the tax directly. Whereas indirect taxes refers to those taxes or that where the taxpayer indemnify himself at the expense of another. So in the case of VAT, so VAT, a kind of tax, 'di ba? Na usually when you buy something, people or the seller will impose VAT on your receipt or on the value of the property, as you can see from your official receipt or from your receipt. There they are passing on the burden of taxation. As to the determination of fixed amount, taxes may be classified as to specific or ad valorem. So, in specific taxes, tax of fixed amount by number, standard of weight, or measurement. Or ad valorem tax, tax of fixed proportion of the value of the property. So a portion only of the value of the property is the basis of the taxation. In ad As to purpose, taxes may be classified as to primary or fiscal or the revenue purpose, as we have discussed this earlier. The secondary purpose niya for general welfare or the control, the regulatory, special or sumptuary purpose. As to graduation or rate, so we have three kinds: proportional, progressive, and regressive. So the higher the tax base is, of course, the higher the tax rate is. So the tax base in proportional tax based on fixed percentage of amount. So okay. Also, if in progressive tax rate of which increases as the tax base or bracket increases. And in the regressive tax the rate of which decreases as the tax base or bracket increases. So kabaliktaran naman siya ng progressive. So yung progressive, mag-i-increase yung tax rate kapag yung tax bracket or tax base nag-i-increase. Diba? Whereas yung regressive naman, yung tax rate niya will decrease kapag nag-i-increase yung tax base niya. So, we'll discuss this later sa mga susunod na lessons natin. Finally, we can classify taxes as to the taxing authority. Those taxes that levied by the national government but imposed under the National Internal Revenue Code collected by the Bureau of Internal Revenue. And those taxes that are being collected by the local government unit. Okay, so now you may have heard this for a long time, the situs of taxation. What is situs again? Situs refers to the place of taxation. So it determines sino ba ang may karapatang mag-tax sa'yo or kailan ka dapat ba mataksa. So it depends upon the subject matter, the person, property, or activity, or yung nature ng tax na impose sa'yo, the citizenship, whether you're Filipino or not, residence, whether you're living here. Also, there's a specific count of days that you've been here for you to be able to consider um, a resident or non-resident. Then your source of income and the place of excise, business or occupation being taxed. These are the determinants for you to be able to to determine the citation. Now, let's proceed to the other doctrines. Toll. This is a sum of money for the use of something which is paid of the use of a road, bridge, or public nature. Ba? So if you're familiar, if you're driving, so you have to pay the toll because you are using the road. Secondly, second word is penalty. So penalty is a sanction imposed as punishment for violation of tax laws or acts deemed injurious. Okay, so if you violated a tax laws, then you'll incur penalty. Special assessment. It's an enforced proportional contributions from owners of the lands for special benefits resulting from public improvement. So what are the characteristics of special assessment? Number one, it's levied only on land. And it's not a personal liability of the person assessed. So hindi siya personal na liability ha ng persons assessed, but is based only on benefits and exceptional both as to time and place. So because there are assuming, 'di ba, your land or your house is benefited probably if you're living in SM Taytay along SM Taytay before SM Taytay is built, the value of the property there is low or is not that high. But when SM Taytay was placed there, of course, the owners of the lots living within the vicinity um, was benefited by that, meaning there's an increase in the value of their real property. So thus, um, a special assessment may be enforced against this. Next, revenue. It refers to all funds or income derived by the government. So, how much does the government earn? So, you'll see that usually it's being announced in news, the revenue of the government. Next, subsidy. It's a pecuniary and aid directly granted by the government to an individual or enterprise deemed beneficial to the public. Now, permit or license, charge imposed under the police power for purposes of regulation. You cannot operate a business without a permit from the government. Next is tariff. Tariff is the system of imposing duties on the importation or exportation of goods. So if you want to import or order from someone directly order from them from someone from the other state, then a corresponding taxes will be imposed by the customs. Now, we have this very important doctrines in taxation, the double taxation. Double taxation is taxing by the same taxing authority, jurisdiction, or taxing district for the same purpose in the same year or taxing period, same subject or object, same kind or character of the tax. So, a taxpayer is taxed twice, ba? By the same taxing authority. Let's say, for example, by the local government of Pasig, you are being taxed twice, ba? Within the same purpose, same year, same object, or same kind of tax. Ba? Real property tax probably on your property in Pasig, then on the ninth month of 2020, you're also taxed again for the same property for the same period. Then that is double taxation. The question is double taxation allowed? Let's see. X, a lessor of a property, pays real property tax on the premises. Secondly, he pays a real estate dealer's tax based on the rental receipt. And thirdly, he pays income tax on the rentals. So he pays 3. Now X claims that this is double taxation. Do you agree? What do you think? The answer is there's no double taxation. Why? Double taxation means taxing for the same tax period the same thing or activity twice when it should be taxed but once by the same taxing authority for the same purpose and with the same kind of character of the tax. The real estate tax is a tax on property. The dealer's tax is a tax on the privilege to engage in business, while the income tax is a tax on the privilege to earn an income. So basically, these three kinds of taxes are different. Okay? So these taxes are imposed by the different taxing authorities, by the national and the government level, and are essentially of different kind of and character. This is just a multiple choice. Mr. Alas sells shoes in Makati through a retail store. So Mr. Alas pays the VAT on his gross sales to the BIR and the municipal license tax based on the same gross sales to the city of Makati. So he pays what? VAT based on his gross sales to the BIR, and he also pays um, municipal license tax based also on the gross sales. Now he comes to you for advice because he thinks that he is being subjected to double taxation. What advice will you give him? Is it A? Yes, there is double taxation and it's impressive. Secondly, the city of Makati does not have this power. Do you think? No? Letter C? Yes, there is double taxation and this is illegal in the Philippines. Do you agree there is double taxation? No. And D, double taxation is allowed where one tax is imposed by the national government and the other by the local government. So as we have discussed earlier, diba, as to scope or authority, taxes may be collected by the national or the local government. So we also have means of avoiding the burden of taxation. First is tax shifting. The transfer of the burden of tax by the original payer to someone else, such as VAT. As they buy or purchase from you, the seller may pass on or shift the tax to the buyer. Okay. And next is tax evasion, the use of illegal means to defeat or lessen tax, as compared to tax avoidance, the exploitation of legally permissible alternative tax rates of assessing taxable income to reduce tax liability. So, kapag sinabi mong tax evasion, you are illegally um, running out, ba? And you may be held liable for that. Whereas tax avoidance, it's legally permissible. So you'll have to enter your deductible expenses, something like that. Okay? Exemption, the grant of immunity to particular persons of a particular class. And finally, capitalization, the reduction in the selling price of income producing property by an amount equal to the capitalized value.
All right. So I think that's all, class, no? So that's the end of module 1. See you in the next discussion on module 2. I have some assignments for you to fill up. See you and goodbye. God bless.